What is up, people? Welcome back to the FFX Academy. Today we are going to talk about the disappointing NFP data and what it means for the gold USD spot market. Also, I'm going to deliver another quality analysis and forecast for you, helping to better understand technical analysis and the fundamentals behind the reasoning. Also, I'm going to show you the things you need to look out for next week on the gold USD spot market and how you should trade it. So if you're ready, stay tuned. It's coming. Right, before we go into any forecasts or any technical analysis, it's important that you understand the economics and the fundamentals on what's happening on the financial markets, especially on the US labor market, because it has a knock-on effect on the gold prices. If you follow the NFP data, if you follow the labor market data, you must know that in the previous 2 months, June and July, the Non Farm Payroll readings were really good. So the economy started to showing really strong recoveries. And followed the strong payroll data, the Fed communicated that they are ready to reduce the whopping $120 billion a month asset purchase program, i.e. bond buying, i.e. quantitative easing. So they signaled to the market that because we have strong labor market data, we are going to pull back or reduce the asset purchase program or the money they're creating in the economy, because the economy is likely to going to overheat. And what was really interesting is that the Fed said that they will keep the quantitative easing of the bond buying program until they show substantial further progress. And this is a really important sentence because it reflects on the goals of the Fed: maximum employment and the 2% inflation rate. Remember that. So the gains in the US labor market, coupled with surging US consumer prices, pushed inflation to its highest for 13 years, and it's prompted the FOMC or the Fed members to call for immediate action as early as September. But August's jobs data was really disappointing. There was only 235,000 jobs have been created in the US economy compared to the whopping 1.1 million in July. So you can see that there is a massive discrepancy between August and July jobs being created. So there was a sense that the economy is going into the right direction because each month more and more jobs have been created. But August came, or actually September, when the August data had been announced, August came and the jobs were really disappointing. And this is really important, guys, because the jobs data miss, that hasn't been enough jobs being created, was actually prompted the Fed to change its plans. And I guarantee there's going to be no announcement in September that they have any plan in the short term to reduce tapering. So we see more and more signs that the gold market is going to be bullish for two reasons. First, the Fed actually said that because we have these contradicting and mixed economic data, we're not going to start with the rate rise straight away, because that is an aggressive way. If they start to increasing the interest rate, that is bad for gold. So what they said that we are going to slowly start tapering. We are going to slowly reduce the quantitative easing or the bond buying purchase, $120 billion a month, that we are going to do it slowly if we see any substantial further progress. But after 2 months of good data, the US economy isn't doing really well because we can see some kind of slowdown in the jobs market. So this is why the Fed is going to change its plans. And the second thing is that they're not going to announce that they started tapering anytime soon because the labor market isn't doing as well. So adding or fiddling with the labor market data or the monetary policy right now when we have contradicting labor market data isn't doing any good for the economy. It's actually going to do harm. So that's why it's really important. We're not going to have interest rate increase, which means inflation is going to stay with us, guys. And it's really good for gold because if inflation is going up, gold is going to go up. So let's look into the technicals now. Looking at the gold USD spot market on the 4-hour chart, you can see on the screen left hand side my open positions. So I entered into positions at around 1785 and currently the price is at 1827. So which means I'm in a 460 pips profit. So it's really good. But enough of the past. Let's focus on the forecast and analysis because that's why you're here. So let me just delete these from the chart. So the first thing you have to do is always start your analysis from a higher time frame. Once you go into the daily or the 4-hour or weekly, whichever gives you more confirmations, the first thing you need to do is identify the market direction. Once you have that, you can get your trend line tool, and the first thing you want to do is draw your trend lines, because you have to identify the trends. And we can see on the chart that it is clearly a bullish trend. If you look back the previous 2 videos, I actually said that we are going to start a bull run shortly, a short-term bull run, because we don't know what's happening in the labor market and the CPI and, you know, all the monetary policies. So I'm not doing any longer-term forecast because it would be silly. We don't know what's happening in the economy. Even the Fed doesn't know. So going back to the technical analysis, once we have the trend identified, I already marked you 2 possible resistance levels on the daily or weekly time frame. So what I did is I put my Fibonacci from swing high to swing low. Now it's difficult because we have this big ass flash crash wick, so it's difficult to use the Fibonacci. And what I did is I identified the possible resistance levels in the bull market. Yes, you heard it right. So the first resistance level is at the 78.6 level, which is at 1860, 1862. The second one is around 1822. The reason why I said this is the first one, because this one is already invalidated. If we go down to a lower time frame, you can see that price broke through this resistance level, and currently the 4-hour candle is closed above 1824, which means it invalidated the 61.80 Fibonacci level. That means one thing: the next destination will be the 1860 area, where we have the next Fib level. So we also have some kind of support and resistance level. So if you zoom in, you can see that we already have another resistance level. So if you look at the chart, you look left, and we can clearly identify that there is a resistance level which the price already started to reject. Look left on the chart. We have clearly 1 resistance, 2 resistance, 3 resistance, and guess what? Price is now currently rejecting. And this is where most of the people are going short, because they just only look left on the chart, because they do not incorporate high time frame analysis and more confirmations. So what they do, especially scalpers, they always do just go short. Well, obviously they got that from the positions earlier, but many people, when they just look left on the chart and do nothing else, they usually fail for one reason: because they fail to incorporate high time frame analysis and they ignore the trend. So what we have to do is, price already started to reject the 1827 level. So if I just zoom in, what do we can see on the chart, guys? If I just move my trend line here, you can see that we have some kind of wedge is start to close in. So if I just get my drawing tool, you can see that we have an ascending bottom trend line, and hopefully we're gonna have a horizontal top. So what it means for us, guys, is that price is more likely to come down and retest either the support and resistance level right here. So you can see that we have a resistance right here. So at 1821 we have a resistance which will become a support, because you see this impulse bullish move to the upside. It's going to be really important, because that is a sign for us that price is gonna go higher. And remember that every impulse move is followed by a pullback, and which has the highest probability to pull back, price to pull back? Well, you can see that there is resistance, there is trend line, and we got to use the Fibonacci as well. So the plan: we are waiting for the pullback to the trend line, to the support and resistance, and to any Fib levels. And what we're going to do is we're going to go long, because we identified that the general market direction is bullish. So we want to jump on the bull train, not the bear train. So price will come down somewhere around here, and then we're going to wait for another confirmation that the price will break through this resistance level, which you identified on the 4-hour chart, if you go back a minute. And then we're going to have another retest. And after the retest, next destination is 1862. And what do you see on the chart, guys? We see beautiful bullish market structure. Now let's do some more tweaks and fine-tuning. So the first thing we want to do is get the Fibonacci tool, Fib retracement, impulse move. swing low to swing high, we already started to see a rejection at the 1827 level. So what we're going to do is we identify the highest probable entry for our long position. And what you see on the chart, we have clearly a support and resistance. We have the Fibonacci 7860, we have the trend line. So we have 3 or 4 confirmations, guys, that the price is gonna go bullish. Now, once we enter into this trade, the next thing we want to do is, you can place your buy limit here, or you can actively manage your position. It's up to you. I usually like to set buy limits, and after I did my morning analysis, you can set your trend line or your stop loss just below, the previous lows. Leave some more room to wiggle, guys, because price could pull back any time. So the first thing you want to do, set your buy limit, then set your stop loss and the take profit. We know that price is gonna go to 1863. It's not a question. That price level will be hit, mark my words. So you set your buy limit, set your stop loss, set your take profit level, and you're just waiting for price action to follow. And that's the plan. That's what I'm expecting, guys. But what if price doesn't respect this trend line? What if price is going to break through? And I'm gonna go and give you an alternative scenario if this plan fails. By the way, I usually give daily technical analysis and market commentary and updates to the AlphaFX members. So if you're interested to receive the same or higher quality technical analysis and forecast, and also market commentary and intraday setups and analysis, go to my website at alphafx.eu and go to purchase or gold scalping course and select your plan and join the AlphaFX Academy. If you have any questions or doubts, you can read about me. I have solid financial background in the past 8 years, working for some of the biggest corporations in the world, and also managing $600 million in one of the most prestigious Korean hedge funds. So you can read about me, you can read about the reviews from the actual members, you can find me on Trustpilot, you can watch my YouTube videos, and if you have still any doubts or questions, feel free to message me, guys. I'm happy to answer any questions. So if you want to receive daily analysis and forecast, head to my website, select the plan, pay, and join the AlphaFX family. Going back to the forecast, guys, what if this bullish plan fails? Because you need to have a contingency plan. You need to be ready for any possible scenarios, any possible outcomes, because remember that market doesn't care about my technical analysis. Market doesn't care about economics. Market cares about money and what investors see and where they put their money. So if the bullish scenario plan fails, and if this trend line breaks, and if the previous market structure breaks, meaning that the price will come down below the previous higher low, all we have to do is the usual drill: wait for this trend line to be broken, wait for the retest, and then enter into a position, because remember that price could easily fake out. Gold loves to fake out. So if you see that this trend line is broken because the price comes below, it doesn't mean that it's broken. Wait for the candle to close below this trend line. But even if it closes below, it's still not enough, because we have previous lows here. So if I just switch to the line chart, you can see that these are the previous lows. Once these lows are broken, so once the price closes and comes below these lows or even lower, that's the confirmation that we have a market structure change, we have a direction change. And all you have to do, because every impulse move is followed by a pullback or retracement, all we have to do is wait the retracement at the trend line, and boom, there you go. Where is your take profit level? Where is your stop loss? Usual questions. I'm not gonna go through, because you should know this already. If you're not confident in technical analysis, head to my website, purchase the plan, and I'm going to teach you everything how you should trade. So if you guys get any value out of the video, if you like this video, please give some feedback, leave a comment below the video, hit the like button and share my video. That is the best and most transparent kind of feedback should I continue giving you the weekly technical analysis. And if you have any requests, please leave a comment below. If you get any value out of the video, smash the like button. See you next Sunday. This is the AlphaFX.